tried and tested methodology, which we have followed for the last 27 years. And we advise on the appropriate fitment of the business opportunity with cases, case studies, and understand the profile of our investors, where we consider a lot of aspects, which also blends together to take an informed decision to buy a business. So today we are very proud, at the same time also humbled, to have worked with our ever-growing community of aspirational entrepreneurs like you, who I would say today is a very evolved community, who are more aware of the businesses, the brands, and I personally feel we have come a very long way in the last 28 years. And we also work with the most credible companies, enterprises, corporates alike, where we help them to develop their franchise network. And most of these companies, I would say, have also today larger corporates, including the top names, including Reliance, including Tata's, including even the Birla Group. They've all been launched through Franchise India platform, and our team works very aggressively with them to find their right partners. So our group, like I said, which operates across India and international markets, we have a lot of synergies at the group level, and the combined strength of our group is leveraged by each of our group company. And we have a broader and a very specialized interest in franchising, licensing, real estate, mid-market, and market M&A. But what has remained constant and the driving force with us is that we have always been a very big catalyst in the entire ecosystem and the space, that we have been a change agent to see this entrepreneur community evolve over the last 2.5+ decades. And also, as a prime mover of the franchise ecosystem, I would say we always felt it was our responsibility to educate investors like you on taking that decision of starting a business. If you're looking to start a business, there are only three ways which anyone considers. One is your own startup. Second is you take a business which is running and operating, and you take over that business and acquire that business, which is called resales. So where you require running business. And third is a franchise business, where you take a business which is tried and tested. Companies give you all the SOPs and training on the business. They give you projections on the business based on the historic performance of the business and the market trends. So at Franchise India, we work on resale. So if you're looking at buying something which is already running, we have almost 200 businesses currently with us in resales, and over 15,000 opportunities on the franchising side, which includes Indian companies across all segments, I would say, from startups to unicorns to corporates, enterprise. We work with all of them, and about 700 international brands where we have exclusive mandate to represent them in the Indian market. So a little bit on franchising. If we talk about franchising, and the first question that comes to everybody's mind is when you look to invest in any industry, you want to know how big that industry is, and is it going to remain relevant in the times to come? And will it sustain in the next, say, 10 years or 15 years? So a couple of things I like to reflect upon and understand how franchising and entrepreneurship has evolved over the years and where it looks like heading in the next 10 to 15 years horizon. So if you look at India, India today is a very big consumption market globally. In fact, the entire world is looking to India, and there are a lot of brands today we are talking to who want to enter India market. The last year alone, we assisted about 50 companies to enter India. So when we look at franchising, it is a very big impact market, because everything today that we are consuming, whether that's a product or a service, all these services, all these products are coming from a franchise brand. And the industry cuts across every single industry. So there is one common question which comes across a lot of time. So which is the best industry or the category to invest in? So if you look at franchising, there is no industry where franchise has not touched. And we've also seen successful companies across all these sectors. India is almost about 180 billion in terms of our size in USD when it talks about the overall market size of franchising. And overall, the industry globally is about $5 trillion. And India today is the second largest franchise market in the world after America. And some of the reasons why it has become big, and it is also, headed to become much larger than what we saw the growth was in the last 10 years. Today, we see this industry will grow at a 10x rate in the next 1 decade, and which is currently growing at a 30% year-on-year growth rate. And so if you look at consumption story of India, which is very, very interesting and very, very big, and this is what has made our economy very resilient. And because we have a massive consumption engine, and 70% of our GDP is driven by domestic consumption, and domestic consumption is what drives our economy, even compared to economies like China. their GDP domestic consumption contributes only about 55 odd percent versus India, which is 70% of our GDP is driven by domestic consumption. Second, when we look at consumption, there is also big formalization of consumption. When I say formalization of consumption, it means that people are consuming more brand consciousness, demand for branded products, services have become much higher than what it was maybe 30 years back. All the consumer categories today are almost 4x of what they were 10 years back, 15 years back, 20 years back. And this is also the time for modernization of service industry. What we saw 22 years back, we saw a big modernization of retail with product industry becoming branded. Now, this time around, the last 2.5 years, we have seen also a big demand for formalization of the service industry, which is becoming branded from services like laundry, which is to your home, to D2C healthcare services at your home, to cleaning services, and even the quick commerce services like Zepto that we use, or Zomato and Swiggy. All these companies are today expanding through a franchise network. And then comes the very big demand side. Today, when I look at our investor buyer group, there is a big growth in the first-time business buyers. And that was the reason I wanted to know a little bit about you, what your profile, have you an experience in running a business. When we started our business in 1999, out of 100 businesses that we would sell, only 10% of these businesses were bought by first-time business buyers, and 90% of the franchisees were taken by seasoned entrepreneurs who had some experience of running a business or a franchisee. Now, fast forward these 27 years, today this community contributes 60% of the total business buying community, who's largely professionals that we serve today. And in the last 10 years, this percentage has almost doubled. Now, when we also look on the demand side beyond tier 1, tier 2 cities, we look at, there's a big dearth of job opportunities and a lack of high paying jobs beyond the tier 1 cities, which is another reason which I would say gives a very big thumbs up to franchising. So even if you look at today's startup ecosystem, 50% of our startups in India, they come from tier 2 cities, tier 3 cities, which also is a very big validation of the spirit and the potential of entrepreneurship. And finally comes, which is the most important aspect and which is very unique to India, is the entrepreneurship legacy. Franchising and entrepreneurship are proportionate to each other. So we understand that the opportunity today is as big as the nation itself and the diversity that we cater to, because India has emerged as a global powerhouse and a capital startup with a lot of unicorns and startups that come every single year. And being a shopkeeper nation, I'm sure you all would agree, we have every single home in our country who has an aspiration. Somebody in that home would have an aspiration of owning or starting a business at some point of time in their lives. So we also understand that an entrepreneur, aspiring entrepreneur like you, have a lot of questions before starting any business. So we'll take you through 5 important assessment tools, which I would say are your very important starting point even before you start exploring opportunities. So Bharat, I'll request if we have the presentation on this. So these are 5 assessment tools that we have categorized, which include your own self-assessment and the industry assessment, the market assessment, and where you want to open the business. Then comes the competition assessment, which is your peer assessment. And finally comes the brand assessment, the brand that you have selected to start. So under these 5 assessment tools, what we've also done is we have created 25-point criteria. So it becomes comparatively easy, but it takes a lot of time for a prospective investor. If you're looking at doing all these assessment tools, typically the time frame that you would need to complete all these assessment tools and do analysis would be anything between, I would say, 30 to about 90 odd days. That is the average time which is taken by any investor to discover the opportunities, evaluate these opportunities, and finally select the brand. So we created a 25-point criteria. The next slide, Bharat, can we move on the next slide? So we created a 25-point criteria, which you see on this screen. And if you have a tick mark of more than 20 on these assessment points, then the opportunity selected by you is great. If you have a tick mark between 15 to 20, it is good. But if your overall score is less than 15, then we do not advise you on the opportunity that you have selected. And there can be a mismatch of the brand selection or the market fitment or the industry assessment and the market where you want to start that business. So I'll quickly talk about all these assessment tools. So starting a business, I would say, is not easy. And even more difficult is building a successful business, which is, I would say, is a bigger and a real challenge in today's time. So successful investing is all about three things. Which is clarity, number one. Second is alignment of your goals, and the preparation is the third one that you need to get started on before you decide to start a business. And for the first time business buyer, the journey is filled with cushions, a lot of uncertainties, and the need for informed decision making becomes even more, I would say, important. And buying a business is not just a transaction, it is a complete experience that brings new learnings, challenges, and opportunities. So to support this journey, we created this holistic framework that enables qualitative evaluation across all these five core dimensions. First and foremost is self-assessment, and I always maintain this is the foundation stage when you look at assessing the opportunities. So some of the key aspects that you need to consider at this stage include your business knowledge, overall experience in the industry, maybe that your professional experience or your business experience. Second is the investment that you're willing to put in the business. And third is the time commitment that you bring, because India has 95% of the businesses in India are franchisee owned and franchisee operated, and 5% of the businesses are franchisee owned company operated, where the brand owner, the company does not require your operational time to be put in the business. And these companies are large companies like Tata, some of the businesses including even Aditya Birla Group or even for that matter, Tata, they have some opportunities in their entire portfolio, which they run only on a franchise-owned company operated model. But typically in most of the investments where the franchisee time is not involved and it is just a pure investment model, typically our investments are higher, which can be anything upwards of, I would say, 3 crores to about 50 crores kind of a benchmark. So the first thing is your own mindset as an entrepreneur. You need to align your life goals and business goals, and you need to ask yourself what entrepreneurship means to you. What is the problem that you want to solve? And if the brand that you have selected, the industry that you're getting in, is actually creating that value and solving the problem which you are looking to start a business on. So we need to look at first and foremost your financial goals. So when I say financial goals, there are three things to be considered, which is the time that you're willing to put in the the timeline that you're looking to achieve that financial goal, whether that's a midterm, a short term, or a long term goal, the risk that you're willing to take on the investment that you are betting on, and third is the return that you expect on the investment. Now, let me explain that. When you look at different asset classes of investment, any asset classes across all asset class group, they only have three fundamental goals of investment. Now, the fundamental goals of investment are safety, second is income generation, and third is growth. So when you look at investment, even in franchise businesses, the different companies who create their models are also based on these three fundamental goals. So when I talk about safety, it also means that the risk that you're willing to take is low, which also proportionately affects your return. So lower the risk, lower your return. So income-centric businesses will come with moderate risk and moderate return. But anything which is growth-centric, where you as a business buyer are taking a higher iota of risk, you also receive higher returns. So most of the franchisee-owned company-operated business, a lot of companies also mitigate to a certain extent the risk of the investors. And because the risk is taken by the company, the gains are also taken by the company. But that is protected. So different models work on different models, different brands work on different models, which we can also discuss case to case. Second is your capital planning. We always advise you to avoid leverage, ensure that you have at least 6 months of your working capital runaway to run the business. So how is your funding coming from? You need to be very sure of your debt and equity ratio, which requires a very careful planning. The thumb rule that we follow here is 50-50% rule, which means that 50% bring your own equity and 50% can be a softer loan that you can take. If your investments are larger, I would say 70 lakh onwards or say 60 lakh onwards. If you have an investment, you can do a 50-50% rule. But if your overall investment bracket is small, say less than say 40 odd lakhs, then try to bring in at least 70% of your equity and 30% of your loan, softer loan that you bring, because the biggest reason for business failure is lack of financial management. Then comes the assessment of the industry, and this has to be chosen very, very wisely. Not every performing industry is right for you, and that is very important, right? So one industry which is right for maybe a friend of yours might not be right for you. So we conduct deep research before selecting a sector. We need to evaluate the industry trend, the life cycle of the business. We understand where the industry currently stands. And this can be at different stages of that particular category or that particular brand, which can be emerging stage. The businesses can be at a growth stage. The businesses can be at maturity stage. So when businesses reach a maturity stage, the markets which they choose are mostly markets which are underserved. They have always, they would have covered all the important strategic markets. So when the companies look at expanding or going at that stage, they either look at consolidation, where they also acquire a lot of other brands, or they look at underserved markets which are currently not being served. And at this stage, companies also consider replacing their current partners, right? And which can be maybe they want to remove the small dealers or distributors, and they want to bring in a bigger partner. So depending on the stage of the industry and that category or the brand, companies have a different go-to-market strategy. Second is the future fitment of that industry. So investment is all about anticipating the future. So is the industry aligned with the long-term consumer behavior, sustainability, digital transformations, regulatory trend are very, very critical areas to be looked at. And then we also look at the growth prospects and the demand supply gap, which is again very, very crucial. Assess whether market demand outpaces supply. So if it is outpacing supply, there is a big creation of opportunity, or if the market is already overcrowded. So if the market is overcrowded, it causes a lot of margin pressure on the business. And it becomes even more severe if the brand or the opportunity that you launched in the market is not having a differentiator, right? If it has a differentiator, there's a reason for your customer to change from an existing brand or a service in the market or product in the market to the brand that you have brought to the market. So these are some important criteria that you should look at. And then comes your market assessment. So we need a lot of go-to-market intelligence, which means the focus areas include how big is the overall addressable market that we are trying to cater to. What is my regulatory landscape, which means the licenses which are required, and every industry has both compliance, which are centered in a state subject. So what these licenses and compliance requirement of your state, which includes your F&B license, your liquor license policies, your drug license policies, these are all very unique to every single state. So what are the regulatory landscape and compliances which are required has to be very crucially understood. And then comes your location strategy, which is the kind of real estate that you want to choose for your for the brand that you have chosen. The rule that we again follow here is look at the existing immediate competitions of the brand that you have selected, understand what locations these brands are already operating. And out of these locations, there might be 3 top brands in your city, which are the top brands, and they might be operating put together in, say, about 20 odd locations in your market. Now, out of these 20 odd locations, try to understand which are the top performing locations for your competition. And when you open next to them, your probability of being successful are comparatively much higher. And then comes the competition assessment, which is, I would say, is the advantage that you have over the competition, which should also include how well the brand has performed, how deeply the brand penetration has been done. Is there a barrier to entry? And these barrier to entry include things like technology challenges, regulations of the government, any kind of patents, licenses which are required. And also most important, I would say, your offering and the differentiation that you bring in, which means that you need to establish a very strong value proposition. And this proposition can be in form of services that we offer. It can be in form of overall product that we offer. It can be a price. It can be a premium price, which currently is not being offered. So these are some of the things that you should look when you look at differentiation to be brought to the market. And finally comes the assessment of the brand. Now, all franchisers are not same. So as a business buyer, you need to do a very in-depth research to know everything about the opportunity, the franchisor, which includes things like how long the company has been into operations, what is the average success rate of their business. Now, it can be a mix of both franchise-owned outlets and company-owned outlets, because a lot of companies, when we started working with Croma in COVID, all these stores, locations which Croma was operating were directly owned and operated by the company. So we took a contract and we started working where we said in order to capitalize, we can, because these were profitable stores. So we reached out to them and we started transferring the company-owned stores to franchisees. And that was a time that Chroma, changed their entire business model. Today, what they do is they only do build, operate, transfer. So they take the locations, they do operations for a couple of months, about 4 to 6 months. And after 6 months of performance, they transfer these stores to their franchise partners. So understand the success rate of franchisees, and if companies operating their own locations, how long they've been running, what is the average sales they do across different markets and different locations, because a mall location or a high street location might not give you the same throughput. So these are areas you need to consider, including the commitment of the brand, how standardized are their systems, processes, because as the companies start to scale, they need to become more and more process oriented. So if their SOPs are written down and defined, because companies actually train their franchise partners on the documented systems and processes. You need to understand your operating cost in the business and the reinvestment. Some businesses, which are long-term, I would say, also require some form of reinvestment. For example, if I'm doing a K-12 school, your reinvestment in the business comes every single year, because the entire infrastructure of a K-12 school is not built on the day that you launch the school, but every single year you upgrade the infrastructure. So what are these reinvestments which are required? So if we have even long-term contracts, say 10 years or 15-year contracts with companies, so you have an agreement with these companies where you have to reinvest some percentage of the capex. Anything between 30 to 40% is what most of the companies make their franchise partner commit in the agreement, because the refurbishment of the infrastructure has to take place. So if there is any reinvestment which is required, you need to understand what percentage of that reinvestment is required by the company, and under what heads are these reinvestments coming under. And then comes your margin profile and the return on the investment that you expect. Now, return on investment, I would say, is a very subjective matter. So when we look at ROI, one needs to understand the return on the investment for any opportunity, any brand or industry is calculated based on the horizon of the opportunity. So if the horizon of the opportunity is large or big enough, I say 15 years, 20 years, 30 years, your return on investment is calculated on that horizon. But for most of the businesses, if you are entering in a contract, say for a period of 5 years, these are your F&B businesses, these are your gyms, your salons, or even education businesses, preschool, not the K-12. The preschools, typically your average return on the investment is anything between 2.5 to 3 years time frame. And then comes your legal aspect, because in India, we follow the British contract. So everything that becomes the part of the contract becomes binding between both the partners. So what is the clauses that you sign on, how the conflict resolution is defined in the agreement, how your exit is defined in the agreement, right? So if you want to exit tomorrow, what is the resolution which the company is providing? Especially if we talk about retail businesses. So companies at the time of your exit can even take your stock, because that is one of the heaviest investments, especially when we talk about retail businesses. So a lot of companies take that stock back at the time of exit. So you need to understand what your agreement has defined these clauses or not. And then comes your training and marketing support, which is given by the company. So training is typically done with the franchise partner and also his team, the staff, which will be responsible for operating day-to-day operations. And the companies mostly support at a national level. If the companies are large who operate on a pan-India spectrum, so these companies would support and would take some fund also from their franchise partner to put in the national marketing fund. A lot of new companies which are entering a new market also put some percentage of their fund at the time of launch. So understand these from the companies. Now we come to the three-stage process that Franchise India follows to help take an informed decision. Bharat, can we go on then? Yeah. So these are three stages that we take into consideration. Stage one is a stage of information. At this stage, a lot of exploration is required to be done, because you're fairly new to understanding different models, opportunities which are available for the market. So you need to understand your own fitment, learn about opportunities which need to align with your strength. And when I say strength, what is that you're bringing beyond the capital which is required for the business? So there are four areas which we actually evaluate. Our teams at Franchise India evaluate all these four areas. And based on these four fitments, we curate opportunities which are shared with you. And these four fitments are strategic fitment. Strategic, I would say, your experience on that business. It can be your business experience or professional experience. Education. Second is operational fitment, which means how much number of hours you have to put in the business. Third comes the market fitment, which means what kind of opportunities would be relevant for that market. the current competition, micro market mapping is very crucial at this stage, and also understanding the rollout of companies in that respective market. So that becomes the market fitment. And finally comes the financial fitment, which is the investment along with our working capital. In totality becomes the financial fitment. So when we do evaluation of your fitment, these are four primary fits that we take into consideration. And after this is done, this is almost a 1 hour meeting with our advisors, our team, who would brainstorm all these four fitments. And after these four fitments are understood, then we go to stage two, where we bring these opportunities to you. Our teams would share the financial business models decks, and we go deeper to understand the selected brands. We organize discovery days with the company management, the leadership, decision makers with the respective companies, and do very in-depth brand sessions, which can last from, I would say, a couple of hours to a full day discovery, including a meeting at their head office, doing some visits or tours at their centers. And then comes stage three, which I would say is a stage of personalization. And after you've selected the opportunity, we customize the deal, which includes a lot of our senior team members, where we work with you to structure the deal. If it is a bigger territory or an area rights that you're taking, we also work with you to plan the territory and the rollout. So all that becomes part of our stage three, where we work with you on signing off the LOI to the agreement stage. So all these three stages, typically for any investor, can take anything, like I said, from 30 to 90 days time, depending on the timelines that you have. Our teams then work backwards to actually match the timelines, but we don't miss out on any assessment tool. So whether your time frame is 90 days or 30 days, none of the assessment tools are bypassed. So our teams take that into consideration. Now, one thing which is very important, we work only with committed investors, and this is a very value-driven engagement. We specialize in helping investors to take a confident decision to bring the best fitment of the business. And our process is actually designed to support your end-to-end, I would say, from discovery of suitable opportunities to evaluation of these opportunities to negotiation and final sign-up. Now, to maintain the quality, integrity, effectiveness, and seriousness at both ends, we exclusively engage with registered investors. And this registration reflects your seriousness intent, which allows us at Franchise India, our team of advisors across 97 cities, to dedicate our time and expertise and also resources to guide you through a high involvement, but I would say even more complex process of signing on the dotted line. And our services involve significant time, effort, from sourcing of opportunities to financials, operational evaluation, market insights, hand-holding you through the entire process. And this is a very intense, consultative, personalized process that delivers measurable value, which ensures priority access to vetted opportunities by Franchise India. It enables a lot of personalized evaluation support and reflects on the mutual commitment, and also protects the time and the effort that we dedicate to each of our valuable clients. So we have a process to register for anybody who's just window shopping opportunities. We also have a lot of free platforms, which includes our webinars that we conduct every single day. We also have our website, which is franchiseindia.com, where you can research these opportunities, see the options which are available. But somebody who's looking at end-to-end process from discovering to the sign-up, we have dedicated man hours that we deploy with every single investor. So I'll let Bharat take you through the final site, and then I'll request Rahul to kindly take on to discuss our two opportunities. And friends, we also have another brand that we're launching today at 12 o'clock. This is a company from Chennai. It is a very premium high-end brand called Visual Grammar. They currently are operating in Chennai and Kerala. So between Tamil Nadu and Kerala is where their current expansion is. And it's a very profitable brand. They currently, in their existing salons, they do almost about 50 to 60 monthly revenue. So they're coming up with a very interesting model, which is franchisee-owned, company operated, where the partner would put in the investment. The entire operations are run by the company. And on top of that, the company is also offering a minimum guarantee of 20% on the investment, which is done by their investors. So to explore the business model in detail, I'll request all of you to join our session at 12 o'clock. I'll request Bharat to also share with you a link of our webinar, which is starting at 12. And Rahul, over to you now.
Thank you so much, ma'am. So guys, as ma'am said, so today we will just cover the two brands. These two brands are in F&B category. And even I want to say these two brands, they are known in the international market, and the Franchise India is the master franchisee who who is not only developing this brand or not only just selling the franchisee, but they're also supporting you how to execute the process while signing the deal, which was covered in last 40 minutes from signing the deal to operate the store. So if I want to say, because as an Indian market, everyone loves tea. So there's a one brand called the Tea Avenue from Sri Lanka. It's one of the oldest brand from Sri Lanka, 1936. Now they entered into the franchisee business. Can I share my screen?
When just to while Rahul would run you through the business. This is a company, Tea Avenue, like I said, and they are one of the most iconic opportunities in the cafe. And Tea Avenue is rooted in four generations, which was run by De Silva Felmy, who actually specializes in tea blending since 1936. So almost 90 years is what they have been in the tea business. And our company, Franchise India and Fran Global, we partnered with them to launch them in the Indian market. So we are master franchise partners of Tea Avenue in India. Our first ever launch, formal launch, is happening at our Bangalore show on 30th and 31st. In fact, Rahul is traveling to the show. We also have the management of Tea Avenue coming specially, flying specially from Sri Lanka to be available in the show. We also have a lot of sampling that we're doing at the event. So should you need more information and if you want to fix up a meeting at Bangalore, so our friends who've joined from especially south of India or Bangalore can reach out to us, and Rahul can do a pre-fix meeting between 30th and 31st with you.
Yes. So coming back to again, thank you so much, ma'am. So coming back to our brand. So currently it's an 89-year-old brand from Sri Lanka. Now they are looking the franchisee partner. So when someone wants to take the franchisee, what support we are giving? So we will help you into the location. After the location, the project management will be supported by us. Supply chain will be also taken care by us. And in terms of the marketing activity, because when someone say the marketing, it's a two type of marketing, the launch activity and the local store marketing, that is also supported. In terms of the ongoing support, so the complete support in auditing, operational support, that is taken care by the brand along with the franchise. So as I said, because you are in the franchisee business, everyone wants to take the bigger picture. So there is another the model called as the area developer rights, where we can give some rights to some territory, some state, some city, where the partner can operate multiple store under them. But they have to create the flagship model. That flagship model will be the owned by them. For that thing, they have to invest some amount to take the territory. The second model we can say as a unit franchisee. When someone says a unit franchisee, and again a unit franchisee, there is a different types of models are available. Multiple model, or we can the multi-unit model, or we can say the single unit model. The beauty of this tea avenue is a specialty tea. And then we have a four different types of category of the products that are available. The first is called as the tea, varieties of tea. Then we came as a beverages content where we have a hot and cold concept, varieties of coffees available, then smoothie shakes. Then we have another segment called as the desert section, where you have varieties of desert sections are available, and then the food items are available because, as you know, when you are entering into the coffee culture, you also require something to eat. So basically, in three models, there will be a varieties of menu we are keeping. So the first model is called as the takeaway, which will be primarily dominate on the malls and the corporate, where the area size will be 250 to 400 square feet. When someone would say that 250 to 400 square feet, so automatically your investment would come around 28 to 30 lakh rupees, out of which 8 lakh is the franchisee fees we are charging. As we are increasing to the another model where the people can come, they can hang out, they can sit together, they call as a mall cafe, or we can say as a cafe culture, where the size will be around 500,000 or maybe 1500 square feet, depending upon your the size where we want to operate this store. Then the investment will increase because your size of the shop increases, the kitchen equipment will increase, and that is the reason your investment would come around 50 to 55 lakh rupees. In this model, what we are keeping the timeline is the franchisee fees. That is for a one time, valid for a 5 year. After 5 years, again the renewal of an agreement with 30% as a renewal fee. The third model is called as a cafe high street because in Indian culture now you see there's a lot of tea, coffee cultures are coming cafe where it's a bigger model where 15,000, 2,000, 3,000 square feet. In a year, the investment would come around 60 to 70 lakh rupees. The beauty of all these three model, we have a varieties of product. Even we are also providing the merchandising of tea avenue, which can be supplied to the sub to the customer through our cafe or through a high street model. Secondly, in terms of the raw material, 100% raw material, because we have a varieties of teas and they are known for the best teas in the market. If you know the Ceylon tea that will be from Sri Lanka, which is one of the best tea that will be the part of our tea avenue. So now, if someone wants to take, they can have a two option. Take an example, if I am from the Karnataka or I am from the any part of the country. If someone say, "Okay, I want to take a complete Karnataka as a state, so we will give you the Karnataka as a state as an area developer rights. They have to open the one store, Silestone store, which is a flagship model, and under them we can do the sub franchise model. If someone would say, no, I don't want to take the complete territory. I want to open a single unit. That options are available. I can say such options are also available to take a single unit first. And once they will comfort, okay, the beauty is that can I take the territory rights? If the territory right is available, we can give to them. The agreement period is for 5 years. Every 5 years, the renewal of an agreement, 30% is a renewal fees. This is a franchisee operated model. This brand entered into Indian market in the month of August, and we are very keen to open multiple store. And the company have a very great thought process. They want to open 500 store in a different part of the country, and that is the reason the franchise India is the master franchisee who is developing this brand in India and the rest of the city. So this is a model where we can work out as a first brand. We're at T Avenue, and we are happy to discuss in detail. If anyone want to take the territory rate, they can directly reach to the Franchise India website, or they can directly reach to the Franchise India team, where we can discuss how we want to work together, what is the role and responsibility from the local area developer, because we need an operator mindset who can operate our brand, who can work with us. We need some strategic partner who can also guide us how we want to multiply the store in maybe a next year or maybe next 5 years. So this is the first brand which you want to cover. And Bharat, can I go for the second brand?
Yeah, please.
Okay. So guys, the second brand is again coming from the Oman. Everyone know about Oman. It's a price base. So you go to the lot of cafes and you see there's a cafe which is coming the frozen concept. But the Oman and the seven fries, because this brand is started from Oman, they are operating into a different part of the country. I can probably say they're also operating into the Indian market, and they're not only present in Oman, but they're present in UAE, Pakistan. Then the Indian market is the fourth country. So basically, the beauty of seven fries, they are doing a freshly prepared fries in front of the customer, and then apart from they have a dessert section, they have a drinks item which is a cold and hot both, and then the other snacks items are available. Being a seven fries member, so who will support you into the location parts again? So we will support you into the locations, manpower hiring, training, supply chain, operational support. The important feature for seven price, if I want to say, the investment is just around 25 to 30 lakh rupees. In 25 to 30 lakh rupees, the investment will divide into two parts. First is called as a takeaway model, and second is called as a standalone model. For takeaway, the area requirement will be 250, say 300 or maybe 350 square feet. For the standalone, it will go from 350 to 400 or 500 square feet. In both the model, we are keeping the same franchisee fees, 8 lakh rupees, and 7% is the royalty. The first store is already live in NSP Mall, NSP, which is a place in Delhi. It is in Pacific Mall. You can go and taste the product. We are coming into the different part of the country as we are opening our store in Mumbai, Hyderabad, Bangalore. And the beauty of this seven fries, we are doing a freshly prepared fries. The seven different types of fries are available, and it's a gluten-free, no preservative is added. If you eat the product, then you will become habitual. You say, "Yeah, I need more and more product." And we will customize the price as per the we will customize the menu. We can add a lot of new varieties of product every quarter, and this is a brand where anyone can eat. One of the people who have a 4 year or 5 year 270 80 year, they can be the part of the seven fries as a customer. Even the some customer can also become a franchise. So our thought process, we are open for both the models, the area rights. If someone wants to take the territorial rights, we are open for giving the territory rights. If someone would say, "Okay, I want to take a unit franchisee," then the unit franchisee options are available. Even in T Avenue and seven fries, in both the model, the tenure is 5 year. Every 5 years is a renewal of an agreement with 30% as a renewal fees. So that is the thing is there. If anyone want to discuss, we are happy to discuss detail, because the webinar is started at around 12 o'clock. Because of the less time, we will cover up all. Okay, Bharat, over to
All
you.
right, thanks so much, Rahul. And to all the viewers, in case if you still have any question, you can get in touch with the number I have, which I already have shared in the chat box. And that's how, I mean, Rahul, you can also share your number directly, right? So that in case if anyone would like to go for these two brands, then of course you can get in touch with Rahul immediately after this webinar. So that's it for the day, everyone. Tomorrow, the next Thursday, we will again come up with the same webinar. We'll explore another business opportunity. I also have shared a link for the webinar, which is starting maybe in next 10 minutes. So you can join that. It is again going to be a fruitful session. So that's